Hello Dairy Today viewers. On behalf of the Market 360 advisors here at Stewart-Peterson, I'm Bob Devenport and this is your Dairy Week in Review for March 27th, 2015. So as always, let's start out here by taking a look at where our CME dairy components settled at the conclusion of this week's trade. Overall, this is a market that seems to be somewhat content for the time being, specifically in cash cheese here, which we haven't seen any major moves in quite a while. So blocks finished up this week at $1.54 a pound. That's unchanged from last week. Barrels settled at $1.54.5, up 2.5 cents from last week. Cash butter settled the week at $1.7525. That's up 7.25 cents this week, with actually most of those gains seen just in today's session alone. Now on to the powders. April whey settled at just under 45.5 cents a pound. That's down roughly a quarter cent here this week. And April non-fat dry milk settled just high of 103, up about a half a cent from last week. Switching over to Class 3 prices, on the nearby months it was a quiet week. April settled at $15.53, posting just a 3-cent gain here this week. May caught up to April here. May had been at quite a big discount here to April over the course of the past couple of weeks. But here, this week and last week, May really went to work by narrowing that spread. And like I said, getting in line with where April is at. So May settled at $15.45 here, up 34 cents on the week. So our 2015 calendar average for January to December Class 3 futures settled this week at $16.25, and that's a gain of 12 cents from last week. So now let's take a look at what we've been seeing in the cash markets here recently. So here we have a weekly chart of the block barrel average, and you can see that cash cheese prices, we bottomed out back here in January at about $1.44 to $1.45 a pound, and since then we've been on a very slow but steady kind of grind higher here up until last week. We pulled back just a little bit, but we are off of those lows, which if we continue to see cash cheese prices rally, that is something that's going to be supportive to Class 3 here as well. But the thing that is maybe a little bit concerning is that the cash market is less than 10 cents off of the low here. In fact, we finished this week at 154.25, and that's up a penny and a quarter here on the week. But you can see that since we're less than a dime off the low here right now, when we look back at January, a lot of the Class 3 contracts actually are really struggling to see any type of attractive price levels. In fact, there was a couple contracts on the board that were below $14 a hundredweight in the 13s. Now that we're less than a dime off the lows, we're seeing prices that are significantly higher than that, and cheese futures are also priced quite a ways higher than where the cash market's at. So if we're going to see any sustained upside, I think, in cheese futures, which would support higher Class 3 prices, we're going to probably have to see the cash market catch up to where Class 3 is pricing cheese at, which at this point in time is a little bit above where the cash market's at. And if that doesn't materialize, I say the risk is that cash cheese is going to hold where it's at or possibly go lower, and in that scenario we're going to see cheese futures and Class 3 contracts probably sell off to get more in line with where either the steady to lower cash cheese market is at, and that could present quite a bit of risk for milk prices in the future, especially as we head into our weaker time frame of the year here as we go through the spring flush. So something to keep an eye on. I think, again, we're going to have to see a nice rally in cash cheese prices in order to support much upside in milk prices in the future. So let's switch over to what we have been seeing in cash butter and powder markets here over the past couple of weeks. So when we look here, you can see that our blue line represents a weekly chart of the spot butter price, and the pink line represents our spot powder price. So over the course of the past few weeks, you can see that butter prices have been sort of slowly grinding lower up until the prior week here, where we did see a nice little bounce. In fact, cash butter rallied 7.25 cents here this week to finish up at $1.7525, and most of that gain that we saw in price actually took place during today's session. In Friday's cash session, there was really one buyer who was aggressively bidding for carloads of butter here, pushed the price of butter up over 5 cents here on Friday, possibly looking to fill orders ahead of the busy Easter holiday coming up here. Could cause a little bit of a spike in that buying demand here and be a reason for that aggressive bidding, looking to build those inventories. Now powder, on the other hand, has been been doing sort of the opposite here. Powder prices have dipped back below $1 a pound here recently, and you can see that they've fallen pretty sharply from the high that we were at just a couple of weeks ago here. Now, powder prices finished at 97.5 cents a pound here this week. That's actually unchanged from last week, and we're right down near our lows from January here, and we're actually right down near our lows from all the way back in the 2009-2010 time frame when powder prices were very undervalued there along with other commodities. So the powder market has done a lot more work to the downside here than butter and cheese, and that's something that's actually offered a lot of resistance to class 4 prices, as there is a lot of class 4 contracts that have actually fallen back below that $14 level, and I'd say that the weakness in powder is probably to blame for that that weakness over in class 4 there. So something to watch here. We could find some support in powder prices down around that January low and maybe get another push higher over time, but only time will tell what we see play out there. The risk obviously would be going below that January low and seeing prices continue to erode. So again, now let's take a look at our second month class 3 contract here. So here's a weekly chart of our second month class 3 contract. So that's currently the April contract on the board yet. So we can see here that not unlike the cash cheese market, we went through this massive sell-off here. We bottomed out back in January at about 14.25 for class 3 is where we finally found a low, and we found support back at our 2012 lows here is where we ran into some good amount of buying interest. And you can see that we have pulled up off of that low from 14.25, but we're having trouble really sustaining any type of upside movement. You can see that volatility has really come down significantly over the past several weeks. Class 3 has been trading in a very narrow range. In fact, the April contract has been in only about a 40-cent range on a day-to-day basis from high to low for almost all of March here. That is very non-typical to see for the second month contract on the board, which tends to be the most volatile contract and really tends to be the one that leads the way in the class 3 market. That's why we pay attention to it so much. So the April contract has been going sideways here, but it seems like it's getting closer and closer probably to that breaking point. It's just very mixed right now. I think we could make the argument for prices breaking higher or breaking lower. Only time is going to tell. That's the issue with these sideways trading markets. Things get so mixed from a technical standpoint that the market doesn't really offer any real solid signs as far as which way the market may break. Now, fundamentally speaking, I'd say things are more or less in a bearish state. Milk production continues to grow. Production was up about 1.7% back in February. Not a massive increase, but an increase nonetheless on top of all the prior months' production increases. Inventories for cheese and butter continue to build, and exports continue to be weak. On top of that, our dollar had rallied to a new 12-year high here just about a week ago. Now, since then, the dollar has gone through a little bit of a correction, but it is still at a very high level compared to where we've been at in the past decade. So that's something that could continue to put pressure on our export demand. So fundamentals point to possibly more of a bearish setup here, but again, we can't be sure because markets love to do the exact opposite of what everybody thinks they're going to do, of what all the fundamentals point to. So all we can do is wait and see what the market tells us as far as when we'll finally break out of this range. The best thing to do is just have that plan ready to go and ready to execute that plan once you finally do get those signals from the market, instead of trying to outguess whether it's going to break up higher or lower. Again, have that plan in place either way and have it ready to execute, because once we do break out, it could move very fast in that direction and could trend that way for possibly a couple of dollars. So again, be prepared for that possible breakout that could come soon. Now, looking at the week ahead here, we will have a Fonterra Global Dairy Trade Auction on Tuesday, and that could provide some insight into the situation in New Zealand here. Again, last week, or I should say the last auction, that Fonterra auction was pretty weak. We were down 8.8% overall, so we'll see if we get some follow-through selling pressure there. And then on Tuesday, we will also have our prospective plantings and grain stocks report released at 11 a.m. Central Time, and that tends to be a very volatile one for the grain market, so that could shake things up a bit on the feed side. Could present some opportunities for buying if there's any bear surprises in that report. So aside from that, that is going to do it for us here today. On behalf of the Market 360 advisors here at Stewart-Peterson, thanks for watching and have a great weekend.